Hey everyone. Interesting report out from Zillow about the housing market. But before we get into it, please hit the subscribe button. It helps the channel out and helps us get the word out as far as like what's going on. So let's jump into it. Zillow's report says the annual home price appreciation has accelerated to record highs in the past 12 months, surpassing the mid-2000s housing bubble levels. Their watermark back then was 11.9. So what's happening is we have the rising mortgage rate, rising inflation, low inventory, and the millennials, right? First-time home buyers can't get into the market because the prices are high. So what Zillow's reporting is there's going to be the rise in inventory. Right here, after months of plunging record lows, inventory finally began to rise in March. Trends will be increasing enough to begin closing the gap with inventory levels from a year ago. Now, as those inventory levels come up, more homes that are coming on the market, there's going to be more homes for people to bid on. So the prices should come down because there will be more people, right, bidding on more product. So you will no longer have, like, say, 20 buyers clamoring over one property. There's going to be more property out, the new inventory, so that they can put bids on those, right? So that's entering the market. So the competition will come down, hopefully. But what they're saying is we don't want it. It's not going to have the market crash that we saw before. Okay, those were different factors. It's not about to pop under certain circumstances, though. Okay, people with the rising mortgage rates, people are more hesitant to get into the market. Or they simply cannot get into the market because they're priced out of it. There's no programs to support them, or it's just they don't have the income. So they're saying that this may make the home builders, the builders of new homes, sort of skittish or want to back off of building. If that happens, then the growth rate of inventory, new inventory entering the market will come down. And that might be problematic because we won't have the influx of that new inventory, which is what we need. Millennials are looking for homes and we need that new inventory. There's not enough inventory on the market. Okay. So then they ask the question here, is the bubble about to pop? Okay. So they talk about that, the buyers feeling the pressure, the builders feeling the pressure to build and the market changing, also the first-time home buyers. Okay. Now, another thing they point to is that in the last crash, one of the things that significantly contributed to it was the high amount of adjustable rate mortgages. And the payments on those mortgages, as the rates went up, the home buyers with those mortgages experienced a bump in their payment. And they got so high that they couldn't afford it. Well, we simply don't have that many of those loans on the market anymore. They were like a lot of toxic loans. People were stated. In other words, they would just say, oh, well, I make this amount of money, and didn't need the documentation to prove it. So here they say most home buyers are insulated from high rates, right? Thanks to the 90% loans in the past years that are fixed rate, fully amortized. Yeah, right here. So what those fixed rates mean that those 90% of the loans out there are locked at a certain payment. And as the mortgage rates go up, it doesn't matter. Their loan payments are going to stay the same. Okay, so that's different as well. So we have those influences on the market. So we'll see what happens. Again, subscribe, and I'll see you on the next video. Oh, put your comments in there and questions. All right.